Hello, everybody, and thank you for joining us back here today. Today, we have the special guest, Michael Luckhoo, co-founder of Cirus. And now, Mike, you and I have talked in official capacity about Cirus multiple times, but today, let's have more of a general chat about the market. Obviously, right now, things are feeling a little chilly. I wouldn't quite say they're anywhere near as bad as the previous crypto winter, but we're definitely getting some vibes of that. Would you say you agree?
Yeah, definitely. I totally agree. You almost kind of look back in history and you think that you learn your lessons and then you get hit with it again. It's like a bad hangover, and you kind of repeat the mistake. So I love to discuss that a little bit more, what this means to the macro markets, but also in the crypto industry and what we're uncovering here. So the views and opinions obviously are reflective of me, does not reflect opinions of Cirrus Foundation. I would love to just share some opinion as me as an innovator inside the industry over the past 6 years and just to shed some light as well.
Interesting. Yeah, I mean, I definitely agree with you. I would say you see the same mistakes being repeated, especially by people coming in new, right? And you really try, and it's funny because anytime there's someone coming into the space new, and I would consider new as in that we're not in before the previous bear market hit, right? They didn't experience the huge downward movement. And I would say, listen, when it hits, it's gonna hit hard. It's gonna hit very hard. You're gonna see a lot of portfolios get completely crashed. You're gonna see the stories all over of X person lost all of their net worth and this and that person leveraged their house and now here it's going negative. It's kind of the reasons why you never tell people to do stuff like that, even though there might be the chance of going up times 10x and everything. And that's just on the retail side. Mike, I was curious if you could shed some light more on the project development side and the people running these projects and some of the mistakes that they've made previously and that you're seeing them make again now.
Yeah, big time. I mean, oh man, it's there's so much to uncover here, and it's exciting. It's also scary for an innovator, and there's kind of like two flips to the side here. You get an entrepreneur, comes up with a brilliant idea, solves a problem, is an innovator. In traditional sense and how it's been done before, they go to raise a seed round, get in front of some early investors. Maybe it's in Silicon Valley or other places that people just believe in this innovator. And usually the test the water with 500K to upwards to a million. Okay, great. Build a product, put together a small team. Let's see some traction, and then kind of take it from there. So you're kind of set with the task of proving yourself in the early stage, building an MVP. And then you kind of go into this next phase, this kind of growth phase, and you look at a Series A, Series B, and so forth. And you get investors who are really locked into vetting the project, understanding their thesis, and not necessarily looking for liquidity off the bat, really understanding the fundamentals from a business perspective first. And what happens is you put an innovator at the test of really understanding each level as they grow and maturing their abilities before they get to the next. So this is really like fundamental because we've completely changed that in the crypto world. We've kind of just said, hey, figure it all out at once. It's all going to happen on day one, and completely unprepared, and it's at this crossroad where now you have an innovator who says, okay, great, I'm now set with this amount of capital. I raised money in my, pre-round or, before token launch, not realizing there's a lot of people, investors that just really want liquidity right off the gate. Yeah. And then they have all this capital, either they're dispensing that like crazy in the treasury, but the biggest fundamental is that they get in now into a trading market. You're building a real product, you're really building innovation. If you have a white paper, that white paper represents innovation to the world, and it's an academia approach. Mm-hmm. But then you're at the same time, you're at the mercy of being a public company, all within the flash of like a few weeks.
Yeah, it's fast.
And that's fast and that's scary. And most young entrepreneurs and innovators have no idea what they're doing in a trading market and have understanding of what trading their currency is and working with exchanges and float management and margin calls and futures and how to work with market makers and see if they're actually in their best interest or not. I'd love to speak on a different topic on that. And so now you're jamming this young, I would say this innovator with all the tests of being a public company with building a product. And it's just a recipe for disaster, especially considering a lot of them are completely unprepared, have no idea what an order book even looks like. And so, in the traditional sense, it was a very scaled approach, and it could be tough because, sometimes you get to that next round and you really want to really get investors behind you, and you can call this the hairpin. So you're really close to turning the corner, but it's the gap is becoming more narrow and narrow. And that's where capital may not exist in a traditional VC sense. So they say, you know what, we can't really bet on you now. You're so close, but you're so far away. But on the token side, maybe you can get the community behind you. They can help you raise that next level of liquidity because you're still in the market. So there's kind of like two flips to this coin where you have the benefits of the market, you have the benefits of the community really believing you if you're really visible, but you have a massive downfall if you're not prepared from understanding what a traditional market really looks like and how you respond to it. And we've seen this time and time again, and it's I think we need to, you know, I guess I'll pause there, but I think there's some recommendations I'd love to come out with as well.
Yeah, you know, so I've worked extensively on the traditional public market side as well. I've talked to hundreds of CEOs of publicly traded companies at this point, honestly. And while having the personal complaint that things move too slow in the public markets, you could definitely go the opposite and say things move too fast in crypto, Web3, blockchain, whatever you want to say. They move too fast for you to be able to keep up and understand. And one of the key things of being like I say, you're the traditional CEO, you're the leader of a project, whatever. You're at the helm of the ship, so to speak. You are managed. That's a multi-role spot to be in. You have the public side, or the image, or the thing you're putting forward to try to bring in other investors, speculators, whatever you want to call them. And then you have to ensure, again, there's actually something happening and being put together at the end of the day. And that book kind of stops with you. And like you said, being put in that position, or putting yourself in that position in the course of like 3 months is pretty intense. And I think that's getting a little better. I think people are entering it with a bit more experience now versus what they were previously. But I would say it's still a large issue. I wouldn't say it's good or bad. I would apply this in the same way you could apply to trading. It's like leverage, so to speak. Now that can, you know what I mean? Like leverage, if you can utilize leverage correctly, you can go far with it. Or you could just, you know, you could totally go bankrupt, so to speak.
Yeah. And yeah, totally. And, you know, like we've seen one of the biggest downfalls now, even speaking on the market side in crypto, it was we were massively over leveraged. You know, we thought, hey, you know what, like this whole idea of coming away from the traditional system, the fiat system and stuff, and they lost the faith of institution. We're still doing the same mistakes here in crypto. We're massively over leveraged. The fact that you can stake ETH and get another staked ETH and then stake that really fundamentally doesn't even make sense. That's a recipe also for disaster too. And it's, you know, we have massive over leverage, we have massive liquidity, we have people, you know, we've seen exchanges not even have the assets that they say they do, and we've you know, I don't even want to go into the deep end of that. So yeah, we have a recipe here, and you know, the biggest problem is that the mindset of the innovator who's coming and trying to make a change in an emerging market is completely unprepared, you know, and we don't have these fail-proof systems kind of built in. And I think that's really where we need to change, because it's not a point of just saying we need more regulation. I know everyone kind of leans towards more regulation, and there's certain areas I support in that for sure. But if we're going to become more efficient in a market, we need to have a little bit more of self-governance built into the system. And I think we need parties, especially reputable parties, step up to the plate and say, hey, guess what? We recognize your new project. We recognize your tenure as a innovator. Here's the qualification we need from you before you are adopted into this exchange, or as even accepted as a market making client. You know, like look at the Series 7 before you become a, you know, get into the broker dealer, you know, kind of play. And that's a high extent. But even something simple as a course that we can offer and say, hey, you know what, there's a 12 series course. Once you pass on week number 8, we know you've done your due diligence of understanding why a token is in the market and how to trade and things like that, and really understanding those fundamentals before you just go and splash in the pond. And so I think there's a lot of things that companies, and you know, I think I've seen some examples where you click a few accept screens before you go into futures trading, like on, you know, KuCoin and stuff like that. There's some like terms and conditions.
The US has been pretty hard on futures, so they've tried their best to like ease people out of that. But I mean, agreed. Overall, worldwide is you're from country to country, you're exposed to all sorts of different things. The US does, I wouldn't say near the best, but like especially in areas like New York and so on, it's much more restricted. Like, but then again, I also felt pretty, I would say, shafted when I could no longer trade on Binance and they wanted me to move everything over to Binance US. I was like, all right, I guess I'm just going to the Binance Smart Chain and just doing everything on there instead of, I didn't want to go back to another, you know, centralized exchange with less opportunity. But you raise a good point. I mean, the US is not inherently trying to stop people from becoming wealthy. That's not it. I know that people like to like, they're trying to stop me, but like accredited investor and all this other thing, it exists or was created to protect this small guy. That's why it was made in the first place. Now, I'm not saying there doesn't need to be a lot of modernization done there, because there does. But at the end of the day, a couple things that are like, hey guys, let's take a chill pill for a second before you
Yeah.
again leverage your house on a digital currency that's going to hyperinflate.
Right. Right. And you know, and you know, from the consumer side, I totally see that, you know, and retail could be totally exposed, and you know, hopefully they do a proper due diligence of what they're investing in and their projects and so forth. But the systemic issue now comes from the project, because they are really at the helm of, is this going to fail or not? And there's no overlying governance around that. There's no overlying structure to say, hey, don't do this, understand float management, understand liquidity, understand lockups, understand, you know, trading fundamental, like, so then the consumer has no idea what's happening in the background of that project and setting the tempo. So we as projects have to feel like we are in a sense self-governed. But you know, for us, we have experience in traditional markets. We have people who have done it for like 15, 20 years. So we were lucky in the sense that we actually have expertise built into in the Cirus side. But there's so many projects I have no idea. So I'm thinking, like, is there a way, in some way, shape, or form, that we can start to introduce some of these projects to a form of governance, a form of established programs that gets them through the ringer to say, yeah, you know what, they've checked the box here. They're ready to get into the market. They're ready to launch in this launch pad and stuff. And I've talked to all these launch pads. They just want instant liquidity. That's
Yeah.
that's all they want, you know? So I mean,
There's
it's an unfair situation, you know, and you're asking that guy who is now flashed with $1 million or more to make those calls. That's a tough thing to say, to turn down, especially.
I agree. I feel like there's an inherent change that needs to happen. Like, again, everybody wants to be wealthy. Everybody wants to be successful. If you're the creator of a project and you own 20% of it, you want it to be liquid fast, and you want to start seeing it appreciate in value. I understand. We all understand money. However, that does not need to be the focus right off the bat.
Right.
It's going to shoot you in the foot. And the people that are doing business with you, you're going to burn them really, really bad too, which is going to continue to damage the whole industry. And people talk and they say like, okay, yeah, it's the money that kind of draws you in, but over time people fall in love with the technology and stuff and so on. It's like, yes, but they still seem pretty in love with the money. They still seem pretty tied to the money. It's like, guys, really, really, really need to have a fundamental change in what the end goal is here, because yeah, I feel like by having that so much, like the focus on getting trading, having high volume, it's like, yeah, but to what are you doing, man? Like, what's going on the project side?
100%, you know, and then you get all this influence from either so-called advisors or so-called VCs, not real VCs in the crypto markets, besides a couple. And then you got the community ranting and raving, and they want more, and you're kind of left with just figuring that out and just providing more, and that's a tough situation. Again, you know, what we have in a traditional sense, some fail-proof ways, you know, before you get to your Series B and C, and then you go investment banks and then IPO, there's a very strict vetting process before you even get to that level, and then you can go in public markets. Public markets is also structured in such a way that you just don't get to the NASDAQ. In some cases, you can go through, you know, crawl, walk, run. For us, we can go on a tier one exchange right off the day one, just with the white paper, and just blow our minds out. Right? It's
Yeah,
like,
it was. I mean, that's gotten a little better. Okay, now
right.
it hasn't gotten better anywhere near the speed it should have. But I remember
Right.
back in the prime ICO days, it was, man, I think this person just hired someone off Fiverr to write this white paper, and they
Right.
just had a random ERC20 coder create this coin. There's no value to it, and then they're off to the races. Oh, look, they raised $4 million. Wow. And yeah, there was absolutely nothing there.
100%.
So I think it's maturing, but it needs to mature faster. But you know what? I think it's times like this that force that maturation, right?
Yeah, exactly. And we have to be responsible as inside the industry, being the leaders and the pioneers, to actually want to endorse change and want to endorse more visibility around these entities. You know, having a leverage ratio for these entities that says, hey, this is our leverage ratio right now at any given point. So we have complete visibility to the consumer side. And from the project side, saying, yeah, we've gone through a 12-week course in understanding fundamentals of trading before we even applied, and we enlisted ourselves. And so there's things that we could do that doesn't necessarily need to get regulators involved, and regulators may not want to step in until something really goes wrong. But that might not be the solution. And I can also say from the regulator side, they're also very underprepared from handling digital assets, and that's a separate discussion. Delicately, we'll handle it maybe on a different call. But if we're going to be real innovators and pioneers, we need to find better fail-proof and better governance to handle this. And when macro markets fall, we can be a little bit more weatherproof because of how pinned we are to macro markets. We know interest rates and hot money flow and everything like that. That's going to happen.
Yeah.
But that doesn't have to be such a cascade domino effect into the crypto industry. And I think that's something we can improve on.
What's interesting about crypto is it's still, despite having a lot of the things unpegged, still largely pegged to Bitcoin. And which is interesting because I don't know if there's anything comparable in capital markets, comparable to versus capital markets like that. But you can still perform better than Bitcoin's performing, but usually it's like Bitcoin drops 20%, everything else drops like 60 further down the line. So it's a little difficult still, but I think weathering that storm, don't crucify me here, but means having your assets kind of spread out across different things other than just Bitcoin, just Ethereum, just BNB, like stable coins. Some of them aren't just anywhere near as stable as they look. Some of them are actually one-to-one with fiat currencies. Some of them actually are, and maybe that's a good place to hold a lot of them. But we could dive in all. But I don't even US Tether. I'm still pretty on the fence about, honestly.
That's another topic, and really understanding the background to that, because auditing on a code base level is something that auditors were not even set up to even do. So Friedman LLP, when they first looked at it, they just said it's not that they didn't want to, it's just that we were not prepared to understand code base auditing and how currency is generated. So there's a huge backstory, and that's why people look at this and say, okay, well, it's just that the traditional sense hasn't caught up. We haven't employed proper digital understanding, and I really hope in some of these conversations that's happening right now with G7 G20 on the introduction of central bank digital currency CBDCs, that there's a lot better governance and framework around that. It seems like there is, and between 23 to 25, they're coming out with a much greater framework around how central banks will actually handle digital currencies. So we think that stable currency evolution will definitely consistently evolve, and I'm bullish on that for sure. And I think to your point, when you say, how do we untether from, Bitcoin to altcoins, that's a tough situation too. We look at like some of the major markets as a whole, and anything that involves tech is still in the form of medium to higher risk. So even in, like the S&P right now, I think year to date it's down 22%, but the Dow Jones Internet Index is down 45%, more than double. So we just know naturally people lean away from things that feel more on the tech side of things and more innately risky. So from a Bitcoin perspective, the same thing happens with altcoins, and then the swing happens again. So it's really hard to say. Yeah, I mean,
it's hard to say, but I feel like just one thing to keep in mind, retail and people developing projects, is don't let your idealism blind you from being a little pragmatic to some degree.
100%.
Like at the end of the day, like again, like I'm not a huge fan of stable coins, but my stable coins are performing pretty well right now. Versus everything else over the past several months, you know what I mean? And like even US dollars, which is getting an unknown amount of inflation right now, being inflated by 12%, still performing better. I'm not saying that's you shouldn't play with Bitcoin. Obviously, what I often try to do, and I even have the series on my channel, reasons not to invest in cryptocurrency. And it's like, you guys need to consider all the potential negatives before you get involved and understand them as you're playing with it. You can't just blind yourself, or even worse, try to blind other people with just the positives, right? I feel like that's just a recipe for disaster. So let's be honest here. And again, while being honest, I'm still here for a reason, right? But let's look at everything on the table and take steps that aren't going to collapse and lead me into eternal financial doom.
Yeah, totally. And I think there's a certain strategy you can play in a bear market, and hopefully there's more education to some of the projects. I'd love to, have some of these guys on a panel and maybe even a future event to really kind of help them, because I think there are some people who are really genuine hearts coming into this industry for change and are just wildly underprepared, and especially how you handle stuff in a bear market. I think the idea is your game has to change, your strategy has to change. And if you're going to really, and we look back at history, successful company coming out of a recession really did really well. One of the best, some of the best companies were built through recessions. So what does that strategy look like? And I think we can lean in to some of the people who have done it before, some of the veterans, even in traditional markets, and really ask their opinion. And I think most of us in crypto are afraid to go outside of the box of crypto and say, hey, I need some help here. I need some help from people, from the Horowitz, or from people who have experienced macro trends over decades, and say, what is the best strategy for a company? How do we employ better governance? What does a board really look like? And I think there's things like that we could really use. And people right now in the institutional side and from the, I would say the internet age, or .com, are willing to help. They actually now in this cycle believe more in crypto than ever before. So they want to come in and support. And I think we should really embrace that.
Yeah. Well. And a board is actually supposed to provide really good consultation for what you do going forward, not just be a name that you pay $100,000 so you can say this person supports the project. That was another common thing. And I think that's lessening a lot too. But all I'm saying is there's definitely bad actors that, like you said, we ourselves as people in this industry should try to clean up a little bit, clean up house, try to do things the right way. And people will come back into it. Obviously, I still think there's a lot of promise in this industry as a whole, and there's definitely people worth working with. And you just got to find the people that are hardworking, have integrity, and have intelligence. At the end of the day, integrity being the biggest one, or else you just have a hardworking, smart crook who's just going to, rug pull you at the end of the day. But all right, Mike, it's been great chatting with you, and I'd love to have you on again soon. I feel like we've covered a breadth of topics here. If anyone has any questions or insight on any of those things, if you want to tear into me for supporting stable coins at all and saying to put your money in fiat, maybe to some degree, go ahead. Either way, but thank you so much everybody for watching. Mike, do you have any closing words before we go?
No, thanks a lot. Just hope to provide more insights in the industry and share from experience. And that's what we're here for, and we can share the bad times together and really get through this and support each other. So look forward to more conversations, and hopefully we can come out with more tips and tricks and really handling these times in the market.
Perfect. Thank you for your time, Mike. Thank you everybody for watching.
Appreciate it.